Hey, what's going on, guys? I'm Chakits Krulsawat with Simply Vegas, realtor and also real estate entrepreneur out here in Las Vegas, Nevada. Today I want to talk about the latest book that I've just got done reading. I want to do a little bit review on it and what my thoughts are about this book. The book is by Robert Kiyosaki. It's Why the Rich Are Getting Richer. What is the financial education really all about? So basically, this is a book if you're just getting into the market as far as becoming an investor and you want to know a little bit more about what's really going on in the real world. You know, this book really just talks about money and how does money really work as far as an economic standpoint. And what I find really intriguing about this book, you know, it really helps you position yourself in the future as far as playing chess. And how it relates to real estate is, you know, after a while, by buying many properties, you start to wonder, how does this all really work? There's more to it than buying real estate. And what it really comes down to is economics. And the reason why it's important because, you know, economics as far as GDP, gross domestic products, inflation, what the Fed fund rates are, is really going to play a big factor in the real estate housing market. And the thing about real estate is, it's not like the stock markets. If, you know, the stock market crashes, you can literally pull your money out. But once you buy a piece of property, you're stuck with that property. You can't cash it out right away unless you cash it out at a steep discounted price. The good news is that if you're buying the right way and you understand, you know, economics in the housing market, when the market crashes, that's when you really want to buy properties and pounce for those buy and hold investors. But some of you guys that are just tuning into my channel, or the ones that, you know, been watching me for some time, you may realize that I'm more of a buy and hold. I like cash flow properties. I'm not a flip guy, even though that I've done some flips because it made sense just to sell the property. However, this book right here, number one, it talks really about the history of money and how money was actually created and where money was backed up from. And it explains to you where we are at right now as far as the dollar crisis and what the feds are doing to prop up money and printing more money and how we are actually losing the value of the dollar. So it talks about that and goes pretty much in depth. Also it talks about the four quadrants, the E, the S, the I, and the B. And the E is for employers, the S is for self-employed, B is for business, and the I is for the investing side. Now, this describes that most entrepreneurs always want to be on the B and the I side because of tax purposes, as far as tax deductions, and also it gets into taxes as well. And what I like about it, it tells a story about how people go out and buy an investment property and put 20% down on a home to get an investment property, and they're making a, you know, 12 to 16% return. However, that's not true, because what happens, those are pre-tax dollars. So if you're making $100,000 a year and let's say you pay 30% in taxes, so basically you didn't really make that $100,000. You only made $70,000, and you put 20% down on a home that's $100,000, which is $20,000. However, you're really not putting down $20,000, you're putting about $26,000 because those are pre-tax dollars. Also, it shows you the hidden benefits of actually running real estate as a corporation, as a business, versus a sole proprietor, because as a sole proprietor, you're getting taxed more. So that's why I always say it's very important to run your real estate business like a real business, okay? Get that business license, but as far as should you do an LLC, S Corp, C Corp, you have to speak to an attorney for that based upon your current situation. Also, he tells one story where he buys $1 million property, and what he does is he pulls some money out, and it's actually tax-free money where he's doing a 1031 exchange to buy a bigger and better property. Okay. Also, he talks about another story where the money that he has into the property, once he gets the money back out, those are tax-free dollars, so he's leveraging it out, and he shows and explains how we are actually in a debt nation at this time, and how debt's actually important. You got good debt and bad debt. And bad debt is where people go out and buy a car and it drops in value, and it's not an asset, it's just a liability. But he explains how the rich in today's market, based upon low interest rates and what central banks are doing now, is they're taking money, they're propping up their own company, or they're taking money, borrowing the money at low interest rates and buying investment properties and paying less taxes based upon the type of corporations that they have. Again, and that's where it comes down to, running it like a business. Also, there's a lot of stuff, they talk about, economics, and it shows you the graph of the dollar losing its value. And, it talks about, gold, silver. It talks about, a lot of people in today's society doesn't really understand a financial statement and how important that is. And that's something that you should always take a look into. Where are you at with your financial situation, and can you actually read a financial statement? And the reason why this is important is because if you're doing a buy and hold property, you want to make sure that once you close out on that deal, based upon all the numbers and what the rental comps are, what type of returns you're going to make. Also, one of the stories that he talks about in here that I find very intriguing is that we always talk about a 16% return, a 24% return. But he talks about a story about how to actually get an infinity return. And, when I first started, I didn't think you can actually get a return that's actually infinity. But the reason why I'm bringing this is up because I actually bought a property that was for like $18,000, and I probably put 60 into it. But what happened was, after a couple years, I cashed out, I got all my money back. Now that property is yielding me a infinity return. And at the end of the day, it's no longer my money, it's the bank's money. So if shit hits the fan, who gives a shit? It ain't my money anyway. But that allowed me to deploy that money into another property that's yielding me about a 24% return. And here in the next 2 more years, I'll get that money back and I'll roll that money over into another deal. But the nice thing about it is tax benefits, and I want to go back into this book. The tax benefits on here, it's unbelievable if you are a corporation, and deferred property taxes and stuff like this in this book is really good. Robert talks about he bought like a building that was like $1 million, and depreciation on the value of the property basically wrote off $300,000, so it really saved them a lot of money in the long run. These are taxes that you don't really see up front because they're hard-working dollars and you're working for it. But if you understand the game of taxes and real estate and how come, a lot of rich people, they make a lot of money is because they play the game. And that's what this really talks about, is just understanding the tax rules, economics, and what's really going on in the world. So if you are getting into real estate, this is actually a really good book to read. I would highly recommend you read this book. And hopefully you guys find this information very valuable to you. And if you're just tuning into this channel, please don't forget to like, comment, or subscribe to this channel. We've been having a lot of subscribers to this channel, and we're growing pretty rapidly. Other than that, thanks for tuning in. I'm Chakits with Simply Vegas, real estate agent, also real estate entrepreneur out here in Las Vegas, Nevada.